Prakash, request you to stay with us and listen into the next conversation that we're going to have. Let's invite our first corporate on the show. Remember, in the past week, we got a lot of positive sounds coming out of companies like Inox Wind as well as Suzlon with regard to the wind power energy sector. Now, to erect some of that, you'll require a crane. So we're inviting the next guest is from Sanghi Movers, Mr. Rishi Sanghvi, the managing director at Sanghi Movers, who joins us on the show. Hi, Rishi. Good morning. Thanks so much for joining in. Well, to erect a turbine, you require, what you lease out. That's a crane. Could you tell us from the wind sector itself, are you seeing incremental demand that's coming in there? As per your presentation, as of the last year, close to around 44% of your business came in from the wind sector. Is this number likely to move up?
Good morning, Nigel. Thanks for having me. So there is a lot of traction in the wind industry, and capacity addition in the country is going to double in this financial year. So we're going to see anywhere between 4.5 to 5 gigawatts of capacity addition in the wind sector. Having said that, we do see our exposure to the wind industry increasing. And I would say that this is a positive trend, given that the Indian government's target of 140 megawatts of wind energy by 2030.
Rishi, hi, good morning, and thanks for joining in. I want to understand what the yields for the company could look like over the next, say, 2 to 3 years. I was going through the conference call that you put out, and in that, a very pertinent question was asked about when the yields would get back to those 2.6 to 2.7 kind of levels that I think you used to enjoy a couple of years ago. Is this a level that perhaps you can achieve over the next 2 to 3 years, given that there is so much traction in this space now and you're sitting on a good order book?
So we expect yields to be around 2%. What we have done is improved our operating levers. So our EBITDA is going up. And that is really what has resulted in us declaring a historic profit last year. So yields will be around 2% for the next financial year.
Rishi, hi, good morning. In terms of receivables from some of these wind EPC companies, anything, is there a problem or is it very smooth out there?
So, hi, good morning. So our receivables from wind companies are on track. They are paying us within the payment dates. I would say that for wind projects, most of the IPPs have project-based financing. So they don't start the construction of the wind farm until the entire financing for the project is secured up till commissioning. So for us, liquidity is not a concern from wind and EPC companies.
All right. Rishi, you have laid out that you want to do a capex of close to 260 crores for the entire of this year. But I understand in the first couple of months itself, you're clocking close to around 200 crores or thereabouts. Do you want to up this capex spend for this year? And also, if you could tell us, how do you intend on funding it?
So our capex plan for this year is at 264 crores. And this has been approved by the board. And as you rightly mentioned, 200 crores has already been brought online. This capex will start adding revenues in the last 3 quarters of the financial year. All our capex is backed by long-term orders. And the management may consider increasing the capex by another 100 to 125 crores, subject to board approval and the demand from the market.
Okay, so this 100 to 125 crores of incremental capex, will that put any pressure on your debt? I mean, you've done some phenomenal work in reducing your debt over the last many years. It's gone down from about 550, 600 crores. And now I think you're sitting on just about 160 crores. But given that you are putting in some capex to work, would this mean some pressure on your debt? And what's the level that you're comfortable with by the end of the year?
So we are an asset-heavy company, and capex is required to fund incremental growth. So as you mentioned, yes, we have brought down the debt to 0.19. And this is effectively, we are a debt-free company. That's why the company has decided to add about 260 crores of capex. I think adding another 100 to 125 crores of debt, subject to board approval and market demand, will not put a lot of pressure on our margins. We fund our capex through long-term debt financing, of which 30% is our margin. And the existing businesses generate sufficient cash flows to reduce the debt as we have in the past.
Okay. Rishi, you just have a, so you look at your stock price, which has done very, very well. And it's basically climbed back above the previous all-time high, which was back in 2015. So after many years, it's come back, above that level. I was looking at, results over the last many years. I mean, going back 5, 6, 7 years, there were pretty rough patches as well. You were in the red as well at one point. I mean, and there has been a very sharp pickup, of course, in FY23. Is it all looking very good from here out? I mean, is there visibility for the next 3, 4, 5 years as you see it? I mean, your order book is about 300 crores, but beyond that, and that's most of it is executable in FY24, but beyond that, how is visibility looking, briefly?
Absolutely. So, I'm proud to say that the company has never made an operational loss. We have a very high depreciation, and so we have extremely good cash profits. But having said that, I do believe that it is India's decade, and the infrastructure growth story is one that is extremely strong. For example, there is almost going to be 200 million tons of new capacity addition. And this is evident through the massive capex upcycle that we're witnessing across all sectors. So petrochemical refineries will add about 80 million tons per annum, thermal power 25 gigawatts, wind power 5 gigawatts, steel 13 gigawatts, cement another 80 million tons, which I might say is at a 10-year high for capacity addition. So all of this capacity addition, along with metros, railways, bridges, ports being built around the country, is going to have a significant increase for the demand of cranes. And going forward, we have a very strong order visibility where some of our order book is reaching out into FY24-25 as well. So I do believe that the capex upswing will create a very strong demand, and it's a very good growth story for the company.
Okay, very quickly, Rishi, you gave us the yield. Utilization is the other important factor. What kind of utilization levels are you looking at for this year? And also, just a quick question, will you look to tap the equity market since the stock price has gone up by such a large extent?
So our utilization levels will touch between 82 to 85%, which for our asset owning company is an effective utilization of around 95 to 100%. Tapping the equity markets is something that we have not considered, but if the opportunity arises, we'll take it to the board and get feedback from them.
Okay, all right. So when the opportunity arises, you'll take a look at it. One quick question, in the quarter gone by and in the year gone by, actually, your freight costs, manpower costs had gone up significantly. So that put a little bit of pressure on your operational performance. Do you see that cool off in the quarters to come?
So we have done a lot of, as we mentioned, we've done about 200 crores of capex. So bringing that capex online does have an impact on our margins. But towards the end of the year, we do believe that we will be able to maintain a similar EBITDA margin as last year.
Got it, Rishi. We'll leave it there. Thank you very much for your time. Good speaking with you, and appreciate you joining in right now. We'll take a quick break. Anuj will be with us in our studios in just a bit, and